My first crypto winter was 2014. So I was in 13, I rode it all the way down 82%, all the way back up again into 2018. It feels much worse now because the number of participants in it is much broader, everybody's angry, everybody's fed up, everybody's miserable losing money, but if you zoom out, ETH is back to where it was a year ago. So, but it feels a lot worse than it did then. It's weird, it's just been, it just feels miserable.
Markets have been in a downward trend, with the threat of further tightening of monetary policy looming over investors' heads. All crypto investors are wondering how much lower Bitcoin and Ethereum will fall. With Bitcoin at $28,000 and Ethereum at $17,000 respectively, the macro investor and notorious crypto fool Raoul Pal explained in his latest crypto panel why he thinks that even though more pain lies ahead, the bottom is rapidly approaching. Additionally, Raoul explains why he is still thoroughly bullish on Ethereum over the coming year and beyond. Consider subscribing or liking the video if you are looking for finance content. There you have Raoul's latest thoughts on the space. Let me pose a hypothetical question to you. I personally would probably invest all $100,000 into Bitcoin. According to what I have heard, that's the future, don't you think? The dip is to be bought, but no one provides instructions for how to prevent the dip from dipping. At this point, nobody seems to know exactly what they will do with the $100,000. Bank of America surveyed clients and found that people now have more cash in their pockets than in the past 20 years. In a story published by the Wall Street Journal, the journal said that every major index is headed to its territory and the crypto market has lost $1 trillion. But I know an option you could potentially do with it. For real this time. Because did you know that Bloomberg recently asked some financial expert the same question? And the answer was, investing in alternative assets like this one, which you probably haven't thought of, was recommended by a large majority of them. In this instance, it was the white hot art market. In fact, I mean when I say it's hot, it is one of the hottest markets on earth according to the Wall Street Journal. Keep watching and subscribe to my channel so you can get more financial information.
My view is that we're probably going faster into recession than anybody expects. It's probably much deeper. I think it's coming. I think we've got a replay of 1974 underway, which was the ISM the Institute Supply Manager Survey, which is a good guide to the business cycle, went from 56 to 30 in 4 months. Similar setup with oil prices screaming higher, supply restrictions, rates going up, the Fed hiking, all the same stuff. And there's several of these in history. Equities don't like it generally. The bond market tends to turn earlier, which I've been waiting for, and bonds have started rallying to say, you know what, things have gone too far. I still think probably have another leg lower in equities into the final low, much like we had in 2018 as well. So I'm not short equities. I've been buying bonds and I've been buying kind of growth equities, all the stuff that's super big up, because I think that the cycle plays out faster than you can imagine, and the outcomes are going to be determined. So as soon as the ISM approaches 50, they stop. Because obviously below that you start seeing unemployment rising, other bits and pieces. So, you know, my guess is we get an ISM print around 52 below consensus, and then by July it's below 50, so they're done. That's my view. I think it's done. If you think of it, it's a retail market predominantly, and you've just taken everybody's wages have gone up a bit, but prices have gone up more, so you've got negative real wages. So what that means is, if you want to pay for your food and your gas bill, you don't dollar cost average on crypto. It's a pretty simple calculation, and it worked pretty consistently. So we're seeing that it's a long duration asset, and it's sold off. Now the question is inflation peaking? I.e., is the rates of change going to come down? If it is, rates will come down, crypto will go up. somewhere around this window, and I don't know where this window is. We have another puke. It's pretty likely. The 60-month exponential moving average on Bitcoin is about 23,000, 22,500. If we get there, possibly. What does that mean for ETH? I don't know. Below 15,000? Possible. 1,500? Possible. But in the end, macro is the driver of some of this. There's nothing else going on. There's no real negative news in the space. But what I'm also seeing is peak fear sentiment. I've never seen anything.
I must say, I've been here for a while, and I think I also haven't seen peak. I haven't seen fear like this in a long time. Obviously,
and anger. Anger, fear. What I try to figure out is how can I lock the network effect in a reasonable way? And I did a lot of work on it. I found it two things together explain pretty much everything. It was the value exchange, let's say on a weekly basis or monthly basis, you choose it, in dollar terms, multiplied by the number of active users. Now the number output is not important, just put it against the price. It's identical to price, and it doesn't have price in it. So it's telling us that the market is pretty efficient at pricing the network. Now, what you're saying is the network growth is the thing we're trying to estimate, right? Because then you've got the real value add. If you can forecast network growth, then you can basically forecast price. But I've figured out how to forecast how to value price. Market's bloody good at doing. The only one that's traded somewhat differently, and it's too early to say, was ETH. It traded at a premium to that, and I think it's to do with the burning mechanism that meant that we've got a slightly different supply structure. So I would probably have to model that out, but I'm not smart enough, but I'll figure out how to do it at some point. But it was the value. So if you think of Bitcoin exchanges more value each week than Ethereum. Ethereum has a lot of transactions, red herring. Transactions are a red herring. Total value and number of active units. Bitcoin beats both. However, if you look at Ethereum, the change in values, the rate of change in those two values in Ethereum is higher, which is why Ethereum's been outperforming Bitcoin over the last few years. And I found it's really useful.
So on that model,
forecast, but it shows what the price is. That's pretty good.
So does that still make you as bullish or more bullish on Ethereum than you are on Bitcoin? Because at one point you were much more bullish on Ethereum than you were on Bitcoin.
Well, I still am, because I think, to Euron's point, is, listen, if you believe the future is in the technology, in blockchain technology, then this whole digital asset space should outperform the safe haven. That's just how things work. It always works out. And therefore,
There's a higher beta.
there's a higher beta. And if you're in an exponential uptrend, because you're in the network adoption model for the entire space, not just for Bitcoin, then it should outperform over time. It's as simple as that. It's not a value statement about, I don't like Bitcoin because X, I don't prefer Ethereum and Y. It's all about network adoption models. Once you understand that, you free your mind of all of the narratives that are in the different buckets.
So it's just about higher beta, and that means that if we are near a bottom, or if we bottomed out, or if we're
It's higher beta plus the network growth, right? Because there's a lot of high beta altcoins that have no network, which is why they keep failing. You need to find the ones that actually have network. And that's the key thing. My course is mainly Bitcoin either way, and I just had a basket equally weighted of other stuff to be involved. So for small weighting, I think it's like 15% of my overall position. Equally weighted, use it as a VC model, which is okay, we'll see. Okay, sure, if something big comes out of it, and you can change your weightings over time because you have more confidence in that particular thing, it works. But you would never bet 100% of your network work on will work.